Let me go ahead and start recording here. Let me turn on this. Let me turn this on real quick. Dude, big congrats to you, sir, Kevin J. Big congrats. I know you blurted it out, but I know what the minimum is because obviously I've been with them before. But hey, man, if I don't see pictures of Raising Cane's later, you can forget it, man. You ain't welcome here no more. I'm kidding. I'm kidding. Or am I? Am I kidding? I don't know. I don't know. I don't know, man. What do we think about that? I think it's OBS virtual camera. That's the one I want. I don't know if it's going to lag my computer, but you know what? I'll turn the camera on really quick just to congratulate you, sir. There we go. There we go. This is in honor of Kevin J here. Passing his top step, getting a payout. Is that your first one, my friend? Is that your first payout? Oh, I gotta put on my glasses too, actually. I can't even see. First one. One of many, I hope. First of many. There you go, man. There you go. Hey, big congrats to Kevin J. We're going to crack open a Spindrift in your honor here. This one is blood orange. One of my favorite flavors, for sure. Here we go. Cheers, 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 cheers. There you go. Cheers. Kevin J. To the Quantitative team. Yeah, what a market we've had today. So on today's agenda, what I want to talk about is why shorts were the answer today, how to navigate the market when there's a large 3-star event, and then a little bit of a mindset of a trader. You know, I want to talk a little bit about how to navigate the market during times of uncertainty. Definitely right now is very uncertain, but I'm going to go ahead and turn the camera off after I take my first sip here. I got to use this for the Spindrift ad. It's always good. This is pretty good. Unfortunately, we don't have Raising Cane's here in Canada. If we did, dude, I think I'd be there like every week, at least every week. All right, so 506. I'm gonna give it a couple more minutes. Usually we have like 30-ish people on Wednesdays. Yeah. The M is the goal. I want the F90. Ooh. Dude, just step it up, man. Just. I know the gradual transition for cars, right? Is you start with the Beamer. And you move on to the Porsche. But dude, you're a trader now. Just go straight to the Porsche, man. Just skip the Beamer entirely. You don't need it. Get the nicest whip, right? It's a great feeling, you know, picking up mom and dad in the nice car, taking them to family gatherings, and everyone's like, oh, what does Kevin do? He's in a Porsche. What's going on? Oh, he dances online for money. I mean, no, he trades the market, dude. What? No, you don't mean it's on a personal level. All right, man. All right, I'll give you that. All right, we're gonna go ahead and get started. So, first of all, quick round here of questions. Who ended the day green? Who's green? Who's red? Who had a difficult time navigating the market today? I know a bunch of you guys are green. There you go. There you go. That's what I like to see, my friend. Give me 1 second. Just going to turn this off because it is lagging my computer just a little bit. Sorry, give me 1 second. Turning the webcam off entirely. It's lagging. Green, there you go, man. Yeah, a lot of green here, a lot of green. We had a comeback hodler, a little bit of red. If you're red, I always say the same thing, right? Journal it. Find out what happened in the trade. If it was a good trade and you still ended red, then it's just part of the craft, right? Part of the trade. But sometimes, a lot of times, you're able to kind of identify what happened when the trade went against you and how you could have better protected yourself. Right? Hindsight's 2020, but going back in time for those trades, journaling it really does help solidify your experience as a trader. Right? We talk about trading in terms of practicing, kind of like practice this craft like an athlete. Same mantra as like SMB, Trillium, those big guys, the big firms. If you don't practice this and you don't journal, you don't write down notes and get positive mental reps, things aren't going to look good for you, right? You're going to be showing up into the market, just being a participant. And we're going to talk about that. We are actually going to talk about this because I've mentioned this before, but I want to kind of dig deep into it a little bit. Obviously, this week is OPEX, right? Tomorrow is actually OPEX. It's a short week. And there's probably not going to be a lot. So here's the thing with OPEX. You're either going to get a random surprise trend day or you're going to get a whole lot of nothing, right? And so tomorrow is probably going to be a day where, me personally, I participate a little bit lighter. I don't really want to throw that much money into the market. If I find a really good position to hold on to, I'll definitely do it. But that doesn't mean that it's going to be like a forced trade, right? And I know a lot of you guys have these trigger fingers. How many times in the chat have we seen, calls now? Do we buy calls now? Well, should I do this? Like, you should do whatever you want to do, man. But I'm going to do what I'm going to do. And I'll definitely share what I'm going to do. But here we go. Let's get started with Q&A. Market prep, and I'll definitely leave some room for questions today because I know you guys may have questions today. I know there's a lot of new people coming on. Healthy number on Wednesday right now, 34 people. That's pretty solid. Pretty solid. Sundays usually we get into like the 77 range. That's too much, man. Too much. I want to cut it off. Cut y'all off at 20. Let's say the first 20 people get in, and that's it. Let me do that next time. No, I'm kidding. We're not gonna do that. Okay, take a look at the calendar for this week. So, we know tomorrow is not an easy day, is it? We have unemployment claims, right? It's a huge event for tomorrow. Philly Fed Manufacturing Index, building permits, housing. So that's not too important. But nonetheless, that happens pre-market, so any futures trader is going to be able to take advantage of that. But we know that this isn't going to be an easy day regardless because it is OPEX. It's a short week. We have all this volatility. What happens in a short week, right? We have a week's worth of volatility crammed into shorter time frame. So volatility, it's going to be elevated nonetheless. And then especially the fact that it's OPEX, we're just going to see that, buying options is probably not the most beneficial. I'm actually working through some of the volatility metrics to see if we can change it and kind of back test it a little bit. Because I know we talk about volatility for SPX specifically, 30% kind of being that threshold, right? SPX, IV threshold, long, short, right? We talk about how 30% is kind of the over and under. The over and under. I'll do this over under. Under 30%. Buying options is beneficial. Sorry, I'll say more beneficial. Over 30%. Selling options is more beneficial. And I mean this in terms of credit spreads. Right, so I mean that study's been back tested for long, many years now. It's a tasty mechanic. And so right now though, since November 6th, can I say that? I actually don't really know how far it goes back, but back based on Questra, I can only go back 3 months. But so far the 3 months that we've had no day no day where we've held above, like under 30%. So it almost seems like every day we come to the market, selling options is more beneficial, right? But how can we navigate the market in that way and not capitalize on these huge moves unless we're able to buy options? So I might actually start changing this personally to maybe 35, maybe even 40. But the thing is, the out of the money contracts have been getting so expensive, and so yeah, I don't know. It might have to be turned into one of those trades where it's like if you long an option, set no stop loss. Which in that case, it's almost again better for you to risk manage with leveraged shares, right? That's something we really love here in quant data. Futures, another asset that we love trading here in quant data. But again, tomorrow being the last day of the market with this pre-market stuff, I bet you volatility is going to be well above 30%. There's no saving it. And then we have FOMC member Barr speaking, 8:45, so that's 15 minutes before New York City lunch. Again, I'm on the West Coast, so that would be 11:45 a.m. for you guys in the loser coast, which is the East Coast. Everyone knows it. Everyone knows it. Let me just have some water here. But aside from that, again, be nimble tomorrow. Don't come into work wearing a jersey. Don't come to work expecting crazy things, whether we're bullish or bearish. Just see what the market's offering, see what the data has to offer you, and then take positions accordingly based on that. So I want to go over today, though. So today, who thought the market was bullish based on today's data? And I'm going to show you what today's data looks like. Oh, what did I do? Oh, I see. Okay, hold on. Let's do this. So this is the open of the market. Let me check really quick here in the crowd. Who's new? Who's new here? I wear a jersey every day. Toronto Raptors. Yo, aren't they the terrible? When was the last time they won, dude? Like never? Bro, does that hurt? Oh, I'm sorry. Sorry, I don't watch sports, but I know they've never won anything. So, okay, a couple new people here, I think. Yeah, show hands if you're new, but if you're shy, that's okay too. If you're not new, that's all right. It's all right. Happy to share. CC, hey, welcome, sir. Welcome. Yeah, so today, right here's what we saw at the open, right? So I have net drift with my filters for today. I have the interval map on delta so far. Okay, and specifically I want to show you delta first before I show you gamma. I have delta and gamma are two main primary buy-side Greeks, right? The reason why I'm not showing Vanna right now is because it's kind of irrelevant at this point. For today, anyways, it was a little bit irrelevant. It was pretty late in terms of calling the direction on Vanna side. So, open the market. What do we expect, right? So this is 6:31 a.m. Immediately, we can identify two things. There's support at 53.20, potentially. Someone's long 54.25. But look how much negative delta we have before we can even get anywhere near the longs. Right now, gamma is also pointing to 54.25. Now, some of you guys might think, okay, MVC's upside. Right? What is the MVC? It's the most valuable contract based on gamma exposure. We understand it as the contract that's set to pay the most based on gamma expansion if price goes there, right? The key is if price gets there. Now, our clues, though, right? That's our only job as traders. We're looking for clues. For the new person here, we always ask this. I mean, I hope you guys are continuing to ask yourself this, but when we're identifying trades, when we're identifying what we want to look for in the market, first question we ask ourselves, What is the most likely scenario based on what we see right now? Right? 2, is what I see worth my risk? 3, how will I put on risk? Right? So for CC, for the new person here, this is something we preach and we repeat here in quant data often. This helps you not throw on these trades, right? There was actually, I'm going to steal this from SMB because I'm taking some of their courses, but you know how some people in the chat are always like, oh, should I buy calls here? Should I buy puts? Should I long or short? What's everyone doing? What should I do? Right? They call those itchy trades. Right? You're itching to put on a trade for no real reason at all. You're kind of just waiting to put on something for the sake of being in it, right? And in my experience, this is how I manage myself. Like, I always ask myself this before I kind of put on large positions or put on any positions, right? Scalp positions are a little bit different. I don't like to do that. I think you guys all know that. Watching me stream for 2 years now, scalping is not my forte. But sometimes, it has to be done. Asking myself first, right, in this scenario, what is the most likely scenario based on what we see right now? So what I see right now in the market is we have some sentiment of long. We don't really see longs until 5,400, maybe 5,405 actually. But before we even get there, we have to travel through. We have to traverse through all this negative delta. So if you combine all this negative delta, understanding that is short delta, which means someone is either short calls or long puts, they do not want to give this up. Right? Do we kind of see that? So the target for price is 54.25 gamma side. But how much deltas would dealers and market makers have to flip positive in order for us to get to this level here, 54.25? It's a lot, right? So if you're calculating the deltas, we can see right here is 500 million. Okay? 500 million in exposed deltas up here. How much negative deltas do we have before we even get to that strike of 500 million? Right here is negative 394. Let's just round up to negative 400. Right here is negative 300. And then even further than that, we have another 200, 200, 200, 230. Right? And then this one right here, 345. Right? That is a... Oh, camera's on. It's all good. That's a lot of negative delta to get through, to flip positive for us to even allow for a scenario of 54.25. Does that make sense so far? Give me a thumbs up if you understand while I drink the Spindrift. Right, so what's the most likely scenario based on what we're seeing? It looks to me like it's short, but we're not really sure. Right? You only want to take on the most confident of positions. Now I know, right? It looks a little bit weird here. There's a lot. Let's zoom in closer to the day. Let's go to London's power hour. So that's, for me, it's 7:30. What do we see? What do we see? Yep, CC, there is a way. I'll answer that later. If I don't answer it, remind me. I don't want to lose my flow here. So this is 7:30, first hour of the market. We're starting to traverse a little bit lower. What happened to 54.25? Did they kind of give it up? Right, this was at 500 something an hour ago. It is now sorry, not negative. Now it's like down to 162. So this kind of tells us that they're kind of giving it up, right? They don't really believe it in anymore, right? Does this still tell us that we should potentially short the market though, or are we kind of getting a little bit too close? That's okay. That was Carmen, I swear. It wasn't me. Do we kind of see that we're starting to inch towards 53.20. What do we think? Here's the SPX chart. Is this 53.20? Yeah, 53.14 was the low, right? So what do we understand of deltas? We know that someone's long here, right? This is a lot of exposure. They most likely wouldn't want to give this up, right? They probably don't want to see 53.20 be lost at this time because they're long here. They're either long calls or short puts, right? That leads to positive delta. So we saw a pivot, right? Pivot right off of this 53.20. Obviously, I know we got to 53.14 as the absolute low, but we always give it a little bit of wiggle room, right? Based on volatility right now, you have to give it a little bit of wiggle room of like $5. So this was a pivot. This is a delta pivot. But overall, what's the next idea we have so far? Right? Oh, you took that pivot? Oh, there you go, Vigil. There you go, man. Raising canes on you, right? Better. Send me something, dude. High of the day, 53.55. So let's go to 8:30. This is 8:30, London's official close. So we always talk about the potential of a London pivot, but here we go. Here's 8:30. Okay, what do we see? Little bit of longs, still down. This kind of came back. These short deltas started to buy back. It was almost like, oh, we may have a potential here, right? But generally, when we see deltas like this, do we want to put on a trade? Do we think this is a tradable environment? No, right? Because we know these as potholes. Potholes in price, generally we kind of boil it down to indecision. Right? So there's a lot of indecision in where price wants to go. Everyone's long, everyone's short. It's a mess. So how can we as traders determine what's the most likely scenario for price if where we're trading isn't that clear, right? Even on gamma side, we know what we already know what we're looking for, right? We're looking for, oh my god, I swear I can draw a straight line. There you go. We're looking for, let's just say on bullish side, right? Because we love being bulls, right? We want to be looking for something like this. That blue line's our price line. Okay, let's just say price is here. Where are we in price? We're trading in a bullish delta and gamma zone. Right? So we know that every opportunity we have to get long, we can get long. Right? Or we should get long. Right? And then our target would be this candle right here. Whatever this most exposed MVC is. Right? But we didn't see that. And so when we don't see this, we don't really have the confidence to put on a directional trade. Yeah, you could sell things. You could do whatever it is you want. If you believe that we're probably not going to break through any of this short delta, which in my opinion, you don't really know, right? But here's when things started to change. We know today, I wanted to bring this up as well, but we know today at a 3-star event. What was the 3-star event? Everyone was waiting for it. Right, I took one trade today, and this was my only trade. Pappy Powell, that's right. Our godfather. Pappy Powell. Now, I'm always on the boat where I don't really like to short against the Fed. I don't want to bet against the Fed, but man, the Fed has really been letting us down as of late. And so we know that he was scheduled to speak at 10:30. Look what happened. This is 10:30 right here. We just decided to absolutely flush. But even before 10:30 happened, right? I actually want to bring you to 10. Okay, now I know I sold 53.10, 53.20 call credit spreads, and I sold it around 10:35, I believe. Understanding that, yeah, the market's cooked right there. How did I know the market was going to be cooked? So I'm going to bring this over to interval map. I'm going to bring this over to these frames here. There was also a clue on net drift. You can see right at 10:20. 1027, what happened? Like, people started to, you can see that 0 DTEs, puts, this is our next clue, right? They really started to load the boat on puts. Right? Understanding that, yeah, Poppy Powell is going to cook this market. Right? So I'm going to bring it, we're going to ignore this for now. You guys already see this, net drift. Definitely a major clue. But even without net drift, you can see based on exposures that we were going to go down. So I'm going to bring this to 10. 10, 11. Right, now we're looking at this market here in terms of what we think is likely here. Okay? So, if you're looking at the red and green, which army would you want to join? Right, that's kind of how we're looking at the overalls now. The overall exposure here. I would want to join the red army. Right, expecting that all these lines of defenses here, 5320, 5320 is probably going to collapse. Right, and we already saw the collapse well before Powell even took the stand. Right, you guys see that? This is 1011. 1011's here. And right when 1030 happened, I'm going to bring this right to 1030. It's just complete collapse. Everyone has given up their longs. Right, 5300's right here. What happens when we hit 5300? This is the MVC. Right, I started to say 5225 was likely going to be the bottom. Right, here's zooming further. What happens? 20 minutes after. This is 1049. Let's go here, 1040. Right, we started to see the peak of 5225. There you go. Do we see that? So we skipped this MVC. So we went through it. A new MVC is formed. Right? We talk about the probabilities of MVC. Right? A new one is formed right here. Right? And now everyone wants to be below 5300. Again, delta is our support and resistance. This is telling us 5300 is now resistance. Major resistance too. There's almost 1 billion in short delta here. Right? You guys see this? And so now that we understand, okay, this is our range now. 5300. 5300 is going to be our wall of resistance. We're not likely to go through 5300. So what do? We sell above 5300, right? That's what I did. That is the actual trade that I showcased and I posted in the analyst chat. We sold 5310, bought 5320, and then we let it ride, understanding that it's very unlikely for us to come up above 5300 when everyone's short here. Right? And so now we see the target of 5225. Now what happened when we met the other MVC, right? The MVCs, it can be multiples, right? We saw 5300, we passed it. We surpassed it. That's 18% chance, right? But we're navigating a market where we just had a 3-star event. Okay? And so we come down to 5225. This is right here. 50. Well, what time is this at? 25. Oh, 12? Oh, wow. Power hour. Okay, yeah. So this is power hour. Is that 12? 12? 1221. Oh, 1221. There we go. Here's your MVC. I know we see 5200. That's a potential. But I said we weren't going to get there. There's not enough time. So there we go. What happens as we got to 5225? We went to a low of 5220. And then what happened? We pivoted, right? Understanding that the market generally doesn't go any further than the MVC, with an 82% chance that we normally don't. Reason being is it's not going to push price further down if there's not enough value for them to do so. Right? We've already made this huge move. Now on the interval map side as well. So here you go. You can see 5,300. This is 5,300. Look what happened as price went well under 5,300 right here. What happened to this? It continued to grow, right? So based on interval map 2, we can see that, yeah, there's no likely scenario that we go through this. And so I know one of the easy money trades that we always talk about is selling. Well, two of them occurred today. The MVC pivot at 52.25, and then selling below 5,300 or selling above 5,300 calls, understanding that, yeah, with this much delta here, we're not likely to go through it. Right, so 2 presented itself. I only took 1. Right, and this leads me to my last little bit that I wanted to talk about. You know, during these times where the market's kind of we're not that certain of everything, especially during days where there's 3-star events or maybe there's OPEX or something. I really want to preach this mantra that it doesn't only come from me, but it's come from S&B, comes from Top Step, comes from a lot of other traders and firms. Get in, get paid, and get out. And then what this kind of boils down to is I know there's a lot of traders here that are always shooting for the stars. You guys don't really have firm targets, and that leads to some of the things that we've seen in the chat: over trading. Someone who's very green on the day but decided, oh, I'm up $1,000. Like now it means I have $1,000 to spend in the markets. Is that how you want to treat your money? I mean, it's up to you, right? But if you want to get into this trading space with a little bit more seriousness, you got to train with a lot more risk management. You got to train like an athlete, right? It's kind of what a lot of people say when they're being serious about the market. I don't think, like, even switching to paper after is even better to just build those mental reps. I'm seeing a lot of people, be green on the first couple trades and then give it all back in the next couple, when really you should have just held on to those profits and, really, again, preach the mantra: get in, get paid, get out. Like, there's no reason to take 10, 20, 30 trades a day. I mean, you guys know I have 3. I generally, 3 is my max. Either 0 for 3, I leave my desk here and the stream's over. Or 3 wins and then I just start talking nonsense with you guys, or 2 for 3. That's it. I only ever normally do 3, unless the opportunity really presents itself. It saves you that mental capital too, because we are participating in mental F1, and I think some of you guys are starting to see it now. I see a lot of you guys here every day. You guys are starting to get tired, and it's because this is draining. This is split-second decisions matter so much, and the more you take trades, the more you focus up on these, candles and data, it starts to wear you down. It really does. And so preserving that mental capacity really helps you continue going through the markets, right, every day. Making sure you get in, get paid, and get out. Keeping on that capital, that you made, keeping the profits. I mean, is there any knowledge doc which explains how to use interval map? It's on, if you go on my YouTube, if you go on Quantita's YouTube, there's actually some information there. There's no documentation yet. I know we have some articles and things to be published soon. We're working through those, but they're not out yet. But again, it's on YouTube. Actually, I think I have a video on my YouTube channel about interval map. So let me take a sip of water here. Now, there was a question earlier from my man CC asking about the overall exposures. Yep, you can do that. There is one tool that we have. It's called Exposure by Expiration. If you add this tool right here, let's switch it up to SPX. Gamma. Now this obviously is dynamic, but you can see for yourself, like 8 a.m., 7 a.m. You can do deltas. And you're looking here. So there you go. And yeah, you can go through time to see like what changed, how the deltas have changed throughout time. Let it load. It's my computer right now. I don't know what's going on. I think it was early when I turned my camera on. But yeah, you can see right here, April 16th. Tomorrow's super negative, but that's expected for OPEX. But yeah, that's how you use it. And again, it's all dynamic, changes all the time. Hopefully that helps you. Yeah, that's it. So yeah, I went through this spiel pretty fast. 20 minutes. I'll let you all have some questions. Oh, did I miss this entirely? How to manage yourself during 3-star events. Yeah, my advice for beginner traders is actually just to stay away from them. Make sure you have closed your positions just before it starts. Let's say 10, 30 minutes before it starts. And then take on new positions after it's done. If you're not confident enough in the event itself, you don't have to trade it. Right? I know there's some people who, like for FOMC, they just have to trade it for some reason. I don't get it. If you're unsure or if you haven't made enough money to throw money at a 3-star event like that, like why are you doing it? Right? Ask yourself if FOMC, if Powell speaking is something you can rely on to pay your bills. Because that's what we're here for, right? We're here to be profitable in the market. We're here to have, accrue some sort of capital from the market. I don't know what it is what you want to do with the market, right? Some of us want to be full-time, right? Some of us don't. Some of us just want a little bit extra. But can you rely on FOMC or Powell or any 3-star event to pay your bills? What's your win rate? What is your win rate on that? And is it a real viable strategy? Right? If you can write down a blueprint like I have for my A+ trades, for my easy money trades, for the mentorship, if you can write it down and give it to another trader and they can execute it the same way or at least 80% of the way that you execute it, can you even do that? If you can't do that, it's not a strategy. It's not something someone would hire you to do. Right? You probably wouldn't even hire yourself to do it. Right? Think about the money manager that you want to hire to manage your portfolio. Right? And they're trading your money on FOMC. Would you be pissed? If you'd be pissed at them, why are you doing it yourself? Just some thoughts. So that's how you manage 3-star events. If you're unsure, like don't do it. There's way too much of this like gambling mentality in the market. It doesn't make sense. You gotta make sure you pay yourself. And if you're not paying yourself like that, then I don't know. Just give your money to me, man. Since Levi's not giving me any money, I've been asking that guy to give me a loan for a interest-free loan, interest-free, payback-free loan for months now. He hasn't given me anything. Hasn't even bought me a coffee, dude. This guy's the worst colleague ever. Oh, he's here. Oh, shoot. I was talking trash about him, but he's here. Yeah, I normally don't do that when he's here. My bad. We'll redact that. Right, Carmen? Gotta stand. Yeah. Any questions? Any further questions here? You walk through your sheet that calculates standard deviations and which data points you plot on your charts. Yeah, so the ABJ levels. You want the ABJ levels, eh? Man, normally I charge people for this, man. $14.97 a month. ABJ levels. give you a second to take a picture of this. The best practice, in my opinion, is to mark whatever levels you want to use as audible levels to alert you on your brokerage. I think some people are always like, oh, I missed this entry, I missed that, I missed this. Well, it's because you didn't hear it. I think if you're hearing something, then you'll know to, oh, hey, look up. Like, eyes up, something's happening, right? Who's actually started doing that since they've watched me do it? Like setting audible alerts. I know some of you guys are trading from work. It kind of makes it hard. But if you're working from home or full time and you're not using like alert levels, I don't know. I don't know what to say. I think a lot of people, actually a lot of the traders that I know, yeah, they do the same thing. They set it as like alerts. So it alerts their phone, alerts their computer, alerts everything. So what are levels? Levels are really just points of interest, right? I use them as targets if I'm like trading a level to level. Use them as targets, but sometimes they mix and match a lot. So let's say like if last week's 50% is pretty much the same as today's open, then you would ignore. You just mesh it into one area of interest, right? So you're talking about walk through my sheet, the calculations. So really, it's just this. Oh, this is my copy of your sheet. But anyways, let's just change it to what was SPX today? What was SPX today? Let's just say 53.40. Open 53.40. IV is not 30%. Let's just say it's like 35. I'm just making up numbers now. But as an example, yesterday's was what, 5400, 5450. So we're only going to focus on line 26. Ignore the rest for now. Line 26 tells us that this is our range. So IV1 high, IV1 low. And mark those on the chart to say that, okay, probabilities wise, right, we are staying within this mean 63%, right? Or 68%. What is the standard deviation curve? Let me show you. Forget so many things nowadays. I'm working too hard, guys. Working too hard for y'all. None of y'all are paying me enough. No one's subscribing to my my subscription service, dude. Unbelievable. Okay. Copy link. Does this work? Oh, there you go. So yeah, 68% chance that we stay within this area right here. Again, based on probabilities, right? I don't do nothing else. So 68% that we stay within IV1 and IV1 low. IV1 high, IV1 low. And then there's a 27% chance that we end below. Right? And end outside of it. So now we have a range of 51.44 to 53.35. And then IV3 is like a 4% chance. And then anything outside of that, you almost always have to take the pivot. That's my opinion. This isn't really meant for like every day. I would say that deltas and gammas kind of supersede a lot of this, especially as of late, because IV's been so high that the ranges that we're getting are they're just crazy. But there have been days where we like just completely skyrocketed, completely flush, and then we can start using this now because we're now well outside of gamma and delta zones, right? 50% range, yeah, so 50% range is just, so if you take a look at, let's say, trading view here, let's say right here, how do I maximize this? Oh, there you go. So 50%, it's like right here. That's your high, that's your low for today. 50% is literally 50%. Like, what's the halfway point? It's like right here. I don't really take out a calculator, but I'm not going to do that right now. But that's literally the 50%. And these are the levels that I use. And I use it for yesterday, use it for the day of, like today's opening range. And then I use it for the entire week, and then I use it for last week. Because the 50%, to me, sometimes catches like this stuff. Like, it allows you to capture like whatever juice ups or juice downs we've had. It allows us to capture some of that range and use it as a target. That's literally what I do. High, low, 50%. And then now I don't have to worry about like, okay, what's the range of this move here? It should already cover from having that 50% level. Right. Now I know it's not common, but it is something that I've used for many, many years now. That's a level I've used. And even in the mentorship, I think some people have noticed that, oh, we actually do recover like 50% of some stuff. That's pretty wild. I don't know. Could be magic. Do I have magic? Maybe. Yeah, hopefully that helps. We have, 10 minutes left. It's actually not bad. 43 people in the chat today. Hopefully you guys are doing okay. Just want you guys to know too, like I am intermediate at best. I am you guys are watching me trade. I have a lot of experience, 6 years, but there's some people that I like to bring on that have many, many more years of experience. And so what I share is just what works for me. It's not always gonna, correlate over to you. If you think something works for you better, like by all means, continue doing it. Continue doing, man. I just do well enough to pay my bills, well enough for my wife not to throw me out, well enough to beg Levi for that $1 million loan, interest-free. Most of my winning trades is when Levi DMs me directly. I'm long here, I'm short here. I'm about to buy 100 million shares of SPY right now, bro. Oh, thanks, dude, thanks. Let me just plug that in real quick. Thanks, man. Oh, man. But yeah, that's it. That's what I got so far. If there's any questions, man, feel free. Drop it in the chat. I'm a nice guy. I'll answer them. Maybe. If I feel like it. But yeah, hey, also want to say welcome to all the new people, because the new people here, you guys are in for a treat. Let me tell you, not a lot of other services do what we do, man. We are free. First of all, we don't pressure no one to subscribe until you find that the data is good for you and you're ready to utilize data for yourself. You want to take trades on your own. Sign up, man. But if you don't think so, I'm not going to hard sell you. I don't care. I mean, I get paid. I pay myself here. And I think you're going to find that really refreshing. And just the amount of free stuff we give, man. I can't even tell you how many Starbucks gift cards I've given. Starbucks gift cards, Nitros, and look at that. Levi hasn't even bought me one. You believe that? This guy, dude. Literally the worst colleague. Worst colleague ever. Don't give me Nitro. Oh, man. Do you have tutorials on how to read and use Kit? I mean, all these are recorded. You can always pop into our YouTube channels. You can see it there. You can always pop into the live streams and see us use it live. You can always go through the recaps we've run. I think that's pretty solid as it is. Regarding using the data, I almost feel like a lot of people pop into here and they try to use the data or understand it, but they actually don't even understand options entirely yet. So if you're someone that's brand new to trading, and you can't explain to me what theta is, or IV is, IV contraction, what gamma represents in the market, I almost feel like you need to do that homework first. Because once you do understand that stuff, seeing this stuff, you'll understand right away. Okay, well, if, let's say, negative 5,300 delta is here, what does that mean? What does negative delta mean? Right? What does it represent? Well, if you understand short delta, how can someone be negative delta? Well, then that tells you all you need to know. Tells you already a lot. And so, so definitely sometimes some homework needs to be done first. But once you feel like you've done it, you really have a firm grasp of options, pop into our YouTube channel, man. Quant Data has a lot of quant data related specific stuff, which I find is great. And then for myself on my YouTube channel, it's a lot of recaps, a lot of mentorship stuff, a lot of mental stuff, a lot of stuff that's like a trader focused, not so much quant data focused. Yeah. Hey, ABJ, I don't know if you saw this earlier, but do you have any recommendations on where you find strategies towards futures or how to find our own in conjunction with the data? Strategies wise for futures is it's really just trading directionally towards something. I think the best way to trade futures, in my opinion, is to be reactive. I use VWAP a lot. I think you guys know that. That's like one of the other levels that I have. The over and under of VWAP. And no, not really. I think I've kind of just found my own vibe for it. It's really, meeting significant levels and then seeing if we taking the bet that we reject off of it or if we continue through it based on the exposures that I'm seeing. And then entry points is really, it's the levels. The levels that I have that have the high, low, 50% VWAP. Those are all levels of interest that you take trades off of. That's how I do it. So hopefully, I don't know. I guess that's not really a firm answer, but I haven't really made like a strategy guide or something like that on how I trade futures. I really trade them the same way that I trade like leveraged shares. I kind of just, if I'm feeling like it's going to go through somewhere, I'm going to take the trade. Entry requirements is really based on these levels being met and crossed. Hey, Nab, what's up, man? Unless there's something specific that you're asking for, if you're asking me to help you like develop your own strategy, I don't know if I can do that for you. Seems a little tough. Seems like a big ask. But I also don't know if I can do that. Take what I've given and like try for yourself. Like, on an area where you believe you can sell credit spreads, take the inverse as well. Like, go long on it as well. That's something I do all the time. I know last year, you guys know I did a lot. Like, one of my main strategies was to sell puts and buy calls. Right? Not every day is a futures day is the problem, 100%. So, one of the things that we talk about is identifying which asset is going to be the best asset to trade for the day, right? One of the ones this is kind of the main one. It's the 30% IV rule. So here's the thing. Here's my last bit before I leave you guys for dinner. Totem pole of, I think it's pole, right? Totem pole of importance. I know it's a stupid name. Someone come up with a better one for me. Trade structures. Right. 1, credit. I think you guys already know that I focus on credit primarily. Credit debit. Right. This is the number 1 trade structure with the highest probability. Right? No matter what you say, no matter what anyone says, collecting premium in the market is the easiest way because it is the highest probability way to make money. But there are some drawdowns, right? There are some times where, this blows up in our face. But nonetheless, this holds true because of the nature of credit spreads, okay? We kind of boil credit spreads down to, like, if you're shooting at a target, what's easier, shooting the target or missing on purpose. Right? Everyone will say missing on purpose. So once you've collected the credit, now you can take the second approach, right? Leverage shares or futures. Dollar cost averaging is available here, that's why. Right, we can double down on these with somewhat of a probability of success. This is like a medium probability. Third is long options. Right, lowest probability of success due to the nature of IV contraction and theta decay. Right, so this kind of helps us in this 30% environment that we're talking about, right? So I know you guys, like, oh, what is this 30% rule that ABJ keeps talking about? Well, over 30%, this is good. Under is good. Under 30%, still okay, but not the best. Does that make sense so far? IV doesn't matter. Okay? Under 30%, best. Over 30% increases your likelihood of failure. Why is that? Who knows? Who knows why that is, sirs? I'm going to show you in a little bit here. Overpaying, correct. Jerry Nuxman, you know so much, dude. I'm about to kiss you on the lips. Here we go. So IV reversion, right? This is something that a lot of people don't think about. So how many times have we heard how many times have you heard in your experience someone buys a call, price goes up, contract stays the same? How many times? We've seen that, right? Maybe you've experienced it yourself. But we always see people in the chat say the same thing. Oh, I bought calls, man. Hey, the price is going up, dude. But hey, man, my contracts aren't going up. What happened? I'm getting scammed. Levi scammed me. Right? That's because at the same time of, let's say, prices going up, IV is also contracting. It's reverting back to its mean. IV and VIX, those are the only two things in the market that mean revert. Only two things. And so when we know that IV is above 30%, the likelihood of it getting back to its mean, which is 30%, is high. It's higher, right? The higher IV goes, like we've seen this before, right? If you go on VIX, we've seen this before. We have seen this before, right? It goes up and it like violently comes back down. It goes violent like both ways. Right? Contraction, expansion, contraction, expansion, contraction. It happens all the time. And so that's the same way we look at this right here. It's the same thing. And so that's why I opened into the market. When you guys see my ABJ plan, I know I didn't post one today, but I'll start posting. I mean, I might not post one tomorrow either. It doesn't make sense. But this one right here. Oh, this one right here. The intraday plan that I post every day. Current IV for 0DT time series, 47%. Selling options more beneficial with IV contracting. But we could see buying options be beneficial. That was yesterday that I posted that. Right? So, yeah, that's kind of how we do things. That's why I focus so much on these metrics in the market, so that I know what's the most beneficial way to participate today. Right? A lot of you guys may think that's takes too much time, or like, oh, I only trade this, I only trade that. I think that's great, but if you know when in the market, whatever asset you're trading is the most beneficial, I think it will really help you. I personally think it will really help you because, like, let's say you only long options, right? Well, what if you know today everything is overpriced and you have a very high chance of failure because you only long options? It's the only thing you choose to do. Would you still participate? Do you have to trade, right? That's right. Num says, am I buying price or time? Something many people aren't aware of, actually. Don't think about. They're just not aware of it. Right? And that's why timing of options really matters. So at 6:05 now, I'm gonna get dinner before Carmen starts yelling at me. But it was a pleasure, of course, always streaming for you guys. I think you guys are a neat bunch, you know. I'm gonna stop the recording right here.